Welcome back to another video on Virginia child support. Today, we are going to discuss calculating income for the self-employed parent. The goal of this video is to familiarize mediators with how to work these cases as well as provide some guardrails to keep the mediation from derailing. For mediators, handling self-employed income cases are one of the most challenging mediations to mediate. Why, you ask? Here are 5 reasons. Determining income for the self-employed parent is a tedious and subjective process. There may be no one right answer. With employees, it's very simple to verify income with pay stubs, leave and earning statements, or W-2s. But with self-employed parents, that is not the case. This leads to scrutinizing bank statements for deposits in some circumstances. Here is a second reason. Many mediation participants do not fully trust one another. The lack of trust coupled with the self-employed parents relying on a tax return which they completed themselves as their financial disclosure makes for intense headwinds for the mediators. A third reason mediating these cases is challenging is because the tax forms and tax laws are not designed to be used for child support purposes. The self-employed parents seek to minimize their tax liability by offsetting their business income with business expenses. While a business deduction may be perfectly acceptable for tax purposes, it may not be considered a reasonable business expense for calculating child support. An example of this would be depreciation. Although depreciation is a legitimate tax deduction, courts typically do not consider depreciation a reasonable business expense for child support purposes. In most situations, the Schedule C tax form is the document the self-employed parent will provide at mediation to disclose business income and expenses. The mediator should be familiar with the Schedule C. Here's the fourth reason. Tax returns create unrealistic expectations. Because business expenses and deductions are scrutinized differently for child support than for determining tax liability, the tax return itself creates an unrealistic expectation of what the self-employed participant's gross income is for child support purposes. There is a high likelihood that the self-employed taxable income is significantly less than his or her child support's gross income. The fifth and final reason is that it's easy for the mediators to lose or appear to lose their neutrality in the process. Because of the headwinds we have discussed, mediators may be driven to put their thumbs on the scale as to whether the amount is or is not a reasonable business expense. Mediators can talk about what courts typically allow and disallow as expenses, but mediators should not be drawing a line in the sand saying it's this way or the highway. With all that said, it would be easy for mediators to walk away from handling self-employed child support cases. But here's why you shouldn't. Money and time. Litigation costs significantly increase when self-employment income is at issue. There is a tendency to have more pretrial discovery. With increased discovery, there is increased time delays. Mediators provide an invaluable service for the participants, lowering their costs and reducing the time delays for arriving at an outcome. The expectation of the mediator is not one of perfection, but just one of competency. Typically, a self-employed parent will provide his or her income disclosure by bringing to the mediation session his or her tax return. Although there is no expectation of your being a tax expert, there is an expectation that you have sufficient knowledge of the subject matter to effectively mediate the dispute. Today, we will primarily be discussing Schedule C tax form, which is one of the major tools used in determining self-employment income. Additionally, we will be discussing what to do when the integrity of the mediation process falters, such as when it's apparent that the self-employed parent is not fully disclosing his or her financial situation, or when the other parent, for whatever reason, becomes withdrawn from the process or loses his or her ability to bargain. Now that we have a game plan, let's get started. Here is some statutory guidance. Self-employed parents are entitled to reduce their gross income for reasonable business deductions. The self-employed party has the burden of proof to establish the expense by a preponderance of the evidence. In real people talk, preponderance of the evidence means more likely than not. Putting it all together, the self-employed parent has to show that it's more likely than not that the expense actually exists, that the expense is required for operating the business, and that it's reasonable. For example, a parent works for Uber. Prior to working for Uber, she had purchased a vehicle for personal use on a 5-year payment plan. Although she documents the expense and demonstrates that is more likely than not the vehicle is necessary for the operation of her Uber business, is it reasonable that the car payment be treated as a reasonable business expense for child support purposes? It depends on her circumstances. Is her Ubering just a temporary job until she gets back on her feet? Does it matter that she uses the vehicle 50% of the time for ride-sharing and the other 50% for personal use? These factors may all play out on what the parties finally agree to. You might need to run the guidelines in various ways to show the impact of the possible solutions, which in many instances is very little. The child support statute requires that 1/2 of any self-employment tax paid shall be deducted from gross income. The self-employed parent uses Schedule SE to calculate self-employment tax and reports the self-employment tax on the other tax section of the 1040 schedule. The IRS collects self-employment tax directly from people who earn income but don't pay withholding taxes through an employer. Normally, employers pay the employer's share of their employees' tax required under Federal Insurance Contributions Act. This tax is known as FICA and funds Social Security and Medicare. Self-employed individuals, however, don't have an employer to cover the employer portion, so they pay both their portion and the employer's portion directly to the IRS. Self-employed individuals must pay this tax as a condition of receiving Social Security benefits upon retirement. The IRS considers self-employed individuals both the company and the employee, which is why they pay both portions of this tax. The total self-employment tax rate is 15.3%. Therefore, 1/2 of this tax equates to 7.65%. Typically, the self-employment tax is mailed to the IRS with a Form 1040-ES, quarterly, but can be paid online or over the phone. If the self-employment tax has been paid, then 1/2 of the self-employment tax should be deducted from gross income. Here is some more statutory guidance. Gross rental income from any property owned individually, jointly, or by any entity shall be subject to deduction of reasonable expenses. However, the deduction shall not include the cost of acquisition, depreciation, or the principal portion of any mortgage payment. Here is the last bit of statutory guidance we will look at. Gross income shall be subject to deduction of reasonable business expenses for persons with income from self-employment, a partnership, or a closely held business. Typically, a closely held business is a limited liability company with the self-employed parent as the sole owner. If so, the IRS disregards the limited liability company, and the owner just files an individual tax return. When more than one person owns the limited liability company, 99% of the time, the owners will be treated as a partnership for tax purposes, and the partnership will file an informational tax return, which is Form 1065. The Form 1065 is similar to the Schedule C. The net profits and losses indicated on the 1065 form are distributed to the partners in accordance with their partnership or the LLC agreement. The more complex the self-employed business structure is, the more likely the need for professionals to provide the parties guidance. So what should you do with this statutory nickel knowledge? You should consider sharing the relevant provisions with the participants so that they mediate with their eyes wide open. For instance, understanding that self-employed parents bear the responsibility of providing evidence for reasonable business expenses is crucial general information that affects both parties. Moving on, Form 1040 Schedule C, commonly referred to as Schedule C, serves as the compass for self-employed individuals. It's the document where they meticulously disclose their business income and expenses. The primary goal of Schedule C is twofold. First, the Schedule C is used to calculate net profit or loss. By subtracting deductible business expenses from total income, self-employed individuals arrive at their net profit or loss. This figure directly influences their individual tax return, Form 1040. Second, to report a business's financial information to the IRS. Schedule C provides a comprehensive snapshot of a business's financial health, allowing the IRS to determine taxable income. Beyond taxes, Schedule C serves another purpose: assisting in child support calculations. When determining gross income for child support, Schedule C provides essential data. By analyzing Schedule C, courts can assess reasonable business expenses, ensuring fairness in child support arrangements. When embarking on the mediation journey, parties commit to a fundamental principle: full disclosure. This means laying all relevant financial cards on the table. For self-employed individuals, this goes beyond mere tax returns. It involves sharing the very documents that shape those returns. Let's explore this process and its nuances. With the agreement to mediate, both parties pledge to provide substantial full disclosure of their financial information. For self-employed individuals, this extends beyond the surface. It includes the supporting documents, receipts, invoices, and business records that underpin their tax returns. The trust factor plays a big role in mediation. Sometimes trust issues arise. Imagine the scenario. The other party questions the validity of the self-employed parent's Schedule C tax form. In such cases, flexibility is key. If the self-employed party needs time to gather supporting documentation, rescheduling the mediation is a reasonable step. Upon reconvening the mediation session, the mediator facilitates a collaborative discussion to scrutinize the documents. Together, the parties determine what qualifies as income and reasonable business expenses for child support purposes. Transparency isn't just a legal requirement, it's the heartbeat of effective mediation. By embracing this principle, parties pave the way for fair resolutions. Remember, the power lies in openness, and the beauty lies in the confidentiality of the mediation room. When dealing with self-employed individuals, managing income documentation can be daunting. However, there are practical strategies to avoid drowning in paperwork. Let's explore how to streamline the process. Understanding business cycles is essential. Here is the key question to answer. Is there a specific time of year when the self-employed person's business income peaks? Imagine a lawn care business. Spring, summer, and fall are bustling seasons. During these months, income spikes. So here is the strategy. Document a full year to capture the financial ebb and flow. This snapshot reveals a fair financial status. Consistency matters. Consider a barber. Their income stream remains steady throughout the year. So here is the strategy. Parties may agree on 3 to 6 months of supporting documentation. Consistency simplifies the process. Creative solutions for poor record keeping. Even if the self-employed parent lacks meticulous records, agreement on income is possible with Bureau of Labor Statistics. Impute income based on the self-employed parent's earning capacity using the BLS pay data that can be retrieved through O*Net's website. To learn more about how to retrieve BLS data, take a look at the child support video on income imputation. Another option for dealing with poor record keeping is analyzing the self-employed parent's ongoing expenses to gauge monthly outlays such as rent, car payment, utilities, and other basic living expenses. In conclusion, remember, it's not about piles of paperwork. It's about understanding the self-employed person's financial rhythm. By tailoring documentation to their unique circumstances, parties can find common ground in arriving at the self-employed parent's monthly gross income. Now let's demystify the 1040 Schedule C tax form. We'll explore how the IRS calculates gross income and business deductions. Buckle up. The Schedule C profit and loss statement consists of 6 distinct sections. The top section captures essential details about the self-employed individual. Part 1 addresses income information. In this section, self-employed individuals report all income received from their business, including sales, services, and other business-related activities. It's the starting point for calculating gross profit and gross income before any expenses are deducted. Part 2 of Schedule C addresses business expenses. In this section, self-employed individuals deduct costs unrelated to the qualified business use of their home. These expenses include advertising, wages, supplies, equipment depreciation, and more. It's where the financial puzzle pieces come together, revealing the net profit or loss for their business. Here is where the participants will be spending the majority of the time scrutinizing whether the expense qualifies for a reasonable business expense for child support purposes. Part 3 of Schedule C is the Cost of Goods Sold section. Here, self-employed individuals report the cost of materials and direct labor used to produce the goods they sold during the year. It's a critical piece of the financial puzzle, as the cost of goods sold figure is subtracted from gross receipts to determine gross profit. In essence, it reveals the expenses directly tied to creating products or services. Part 4 information on the self-employed person's vehicle. Here, the self-employed parent identifies how the vehicle was used by breaking out business, commuting, and personal mileage. Utilize this mileage information to determine the percentage the vehicle was used for personal versus business use. Apply this percentage in allocating vehicle costs between personal and business costs. Part 5 of Schedule C is where you can list other business expenses that didn't fit into the categories in Part 3. It serves as a catch-all section for eligible expenses that don't neatly fall into the predefined categories. At the end of the day, the Schedule C's purpose is to provide the self-employed person's net gain or net loss from the business. If you have specific questions of IRS requirements, check out the Schedule C instructions from the IRS website. The business's general information section located at the top of the schedule first solicits the parent's name and social security number. Item A's field describes the type of business while line B contains an IRS code identifying the type of business. This code comes from a list of North American industry classification codes found in the Schedule C IRS instructions. For example, if the owner's business is cutting hair, the North American Industry Classification System code is 812111 and found under the heading Personal and Laundry Services. Verifying the code is a good way to double-check how much effort and time the self-employed parent spent in completing the Schedule C. Item C provides the business name. If the business has no separate business name, then Item C can be left blank. If the self-employed parent has employees, he or she should have an employer ID number. The IRS requires an employer ID number for withholding taxes, pay employment taxes, and reporting wages to the IRS. Note, having an employer ID number does not necessarily mean that the self-employed person has employees. Some banks may require the employer ID number to open up a business bank account. Moving on, Item E should contain the business address. If the self-employed person is working from home, it should contain the self-employed person's home address. Item F identifies what type of accounting method the self-employed person is using. The most common type of accounting method is the cash method, followed by the accrual method. Cash accounting and accrual accounting are two methods used to track income and expenses in financial reporting. Here's the difference between them. Under cash accounting, transactions are recorded only when cash is received or paid out. In other words, income is recognized upon receipt and expenses when paid. It's straightforward and mirrors actual cash flow. With accrual accounting, transactions are recorded when earned or incurred, regardless of cash flow. Larger businesses often use this method. Item G indicates whether the self-employed parent actually is hands-on with the business or not. Item H indicates whether the business recently opened during the taxable year in question. Item I and J reflect whether the self-employed parent has paid any entity over $600 for the year for business-related services. In general, federal law requires a business to file a 1099 form when the business pays an entity over $600. Significant concerns arise when self-employed individuals fail to accurately complete their Schedule C, like failing to enter the correct North American Industry Classification Code, or not filing 1099 forms when the self-employed parent has paid an entity over $600 for the year, or the self-employed parent has employees but does not have a federal employer identification number. These failures raise issues as to the reliability of the Schedule C content. Part 1 Business Income. Let's start with Line 1 and work our way down to Line 7. Line 1 represents the total income generated by the business, commonly known as gross receipts. Documentation of income comes from 1099 tax forms, invoices, sale receipts, cash register tapes, credit card sales records, bank statements, and transaction summaries from online sales platforms. It is difficult or almost impossible to determine whether any monies went directly into the self-employed parent's wallet. One way to test is whether the parent's lifestyle does not reflect what the parent can actually afford. How can the parent afford a $750 car payment and $1,800 rent when his or her gross receipts amortized over 12 months is $1,500 per month? It just doesn't pass the smell test. Line 2 provides a total of cash and credit refunds as well as sales allowances, which are reductions in the selling prices instead of a cash or credit refund. The amount listed in Line 2 reduces gross income amount. The adjusted gross income amount is inserted in Line 3. Line 2 amount must be tested to determine whether these returns and allowances are reasonable business expenses for child support purposes. Line 4 provides total sum of cost of goods sold, which is calculated in Schedule C's Part 3. Cost of goods sold refer to the direct costs associated with producing and delivering goods or services. While traditionally associated with product-based businesses, it also applies to service-based companies. If the business does Part 2. Deductibility of business expenses. Business expenses on Schedule C are deductible for income tax purposes, but not necessarily for child support calculations. Seek guidance from your mediation coordinator or the courts to set boundaries. Scrutiny and allocation of expenses. The business expenses should be scrutinized to determine whether they are reasonable and necessary for the operation of the business. Personal expenses disguised as business costs should not be deducted. For mixed expenses such as cell phones, allocate a portion as a business expense and the rest as personal. The mediator's role in determining reasonable business expenses. Mediators don't decide what the reasonable expense amount is. It's up to the parties. Mediators facilitate conversations to reach negotiated expense amounts. Schedule C Expenses Overview. Expenses begin on line 8 and end on line 27. These expenses do not include expenses for business use of homes. Total expenses are added up on line 28. Subtract line 28 total expenses from line 7 gross income to find tentative profit or loss, entered on line 29. Line 30 covers expenses for business use of home. Reduce line 29's tentative profit by line 30 to get actual profit or loss, which is entered on line 31. For child support purposes, this amount is the proposed annual income. Let's roll up our sleeves and go through the expenses. Advertising line 8. Here are some examples of advertising expenses. Website development, online listing fees, promotional materials, and print ads. Vehicle expenses line 9. The self-employed parent elects between using actual vehicle costs or the standard mileage deduction. Family courts prefer actual costs over the standard mileage deduction because it reduces speculation over the costs. The IRS requires the self-employed parent to maintain a mileage log to separate personal and business use. Standard mileage rate for 2024, 67 cents per mile. Commissions and fees line 10. Here are some examples. eBay, Amazon listing fees, bank fees, and credit card processing fees. Contract labor line 11. Contract labor should only be posted under contract labor. This amount should neither be listed as a legal service fees or as wages. The self-employed parent should have issued a 1099 form for the contract laborers if they earned over $600 during the year. Depletion line 12. Leave it blank unless the self-employed person is engaged in mining, drilling, or logging. Depreciation line 13. Judges often don't count depreciation as a reasonable business expense. It's a tax deduction for recovering asset costs over time. If the asset is paid off, there is no impact on child support. If the asset is not paid off, then the parties might consider the monthly cost or a portion thereof. Employee benefit programs line 14. Here are some examples. Dependent care, health, accidental, term life insurance. Courts usually exclude them as reasonable business expenses. Business insurances line 15 must be business-related. Examples are workers' compensation and liability insurance. Health insurance should not be included on this line. Interest expenses line 16 include interest on business loans, credit cards, lines of credit as long as the self-employed parent can show that the items purchased are business-related. Legal and professional fees line 17 must relate to business operations. Examples include attorney fees for drafting lease agreements and fees for work-related certifications conducted by professionals. Office expenses line 18 include supplies, postage, shipping, telephone, and internet service. Pensions and profit-sharing plans line 19. Typically, courts will not consider a self-employed parent's pension and profit-sharing plan as a reasonable business expense for child support purposes. Rental expenses line 20. If the self-employed parent used the rented phone or vehicle 45% of the time for business use, then only 45% of the total expense should be allocated as a business expense. Repairs and maintenance, line 21, covers incidental repairs to maintain property value. If using standard mileage deduction, line 21 should not include vehicle repair costs. Supplies, line 22, that are used during the taxable year. These supplies are not part of cost of goods sold or office supplies. Taxes and license fees, line 23, include state and local sales taxes, real estate and personal property taxes, as well as city business license fees. But it should exclude self-employed parents' own self-employment tax, which is reported directly on Form 1040. Travel and meals, line 24A and 24B, relates to overnight business travel. Courts may hesitate to deduct meals as reasonable business expenses on the notion that everyone has to eat. Utilities, line 25, must be necessary for business operations. A home phone expense isn't deductible unless there's a separate line for business use. Employee wages, line 26. Wages paid to self are reported directly on Form 1040 and should not be included on this line. Other expenses, line 27, is a catch-all for unaddressed expenses which are not covered in lines 8 through 27. Schedule C Part 5 addresses these expenses. You know the drill by now. If you have any questions about these expenses, check out Schedule C's instructions found on the IRS website. Part 3, Cost of Goods Sold. We are not going down too far in this rabbit hole. We might not find our way back. We are going to take just a high-level view. So here it is. Cost of goods sold refers to the direct cost of producing the goods the business sells or uses in its services. It includes expenses related to raw materials, labor, and manufacturing overhead. It helps determine the actual profit by accounting for production expenses. Self-employed parents have the option to use the cost of goods sold to calculate these business expenses. It is more relevant for self-employed individuals who sell goods as opposed to services. If you need more information on the nuts and bolts of cost of goods sold, you know where to go. That's right, the IRS's instructions on Schedule C. Part 4, Vehicle Information. If the self-employed parent is using his or her own vehicle for the business, then this section should be completed. As stated earlier, the IRS allows the self-employed parent to choose between using actual vehicle costs or the standard mileage rate for determining work-related vehicle cost deduction. Note: as a general rule, commuting miles are not tax deductible. Suppose the self-employed parent drove 6,500 miles for work in 2024. Using the 2024 standard mileage rate of 67 cents, the total deduction would be $4,355. IRS requires the self-employed parent to maintain a mileage log. From a child support perspective, unless the parties agree otherwise, the self-employed parent would have to provide actual costs because the standard mileage rate is speculative in nature and does not reflect actual expenses. What if the other party will not agree to reduce the self-employed parent's gross income by the standard mileage deduction? How would you handle that? If the parties could agree on the average cost of gas and the vehicle's average miles per gallon, the self-employed parent would receive a deduction for work-related gas costs. For instance, consider the year 2024, where the parties have agreed that the average gas cost is $3.25 per gallon, and that the self-employed parent's vehicle averages 25 miles per gallon. Here's the two-step straightforward math process. Step 1. Calculate the costs per mile. Divide the vehicle's average miles per gallon, 25, into the average cost per gallon of gas, $3.25. In this example, the cost per mile would be 13 cents. Annual gas cost. Multiply the cost per mile, 13 cents, by the number of annual business miles. If the self-employed parent drove 10,000 business miles, the annual gas cost would be $1,300. By reaching such agreements, even if all documentation isn't available for all reasonable business expenses, the self-employed parent can still receive credit for work-related gas costs. It's a practical approach to overcome the impasse. Having covered Part 5 other expenses, we've completed our discussion of the Schedule C form. Here are the final two considerations regarding Part 2 expenses. The reasonable business expense assessment. Parties must evaluate whether each of these expenses would be a reasonable business expense under child support law. The child support and not the tax law analysis is the deciding factor. Additional resources. If you have any further questions about Schedule C, you got it. Check out the IRS's official instructions available on their website. The gig economy encapsulates a modern labor market, one increasingly defined by short-term engagements, freelance opportunities, and contractual work. This paradigm shift from traditional, long-term employment to a more fluid and dynamic workforce is underpinned by the rise of independent contractors and freelancers who embrace temporary, yet flexible job roles. While this economy heralds a new era of worker autonomy and scheduling flexibility, it also brings with it a trade-off in the form of reduced job security and a lack of conventional employment benefits. In this digital age, technology serves as the backbone of the gig economy, fostering connections between workers and potential clients or customers via online platforms. These platforms, often referred to as gig apps, function as digital marketplaces, offering a dual interface that caters to both service providers and consumers. Unlike the traditional job application process, individuals can simply register on a gig app to find work. Despite the informal nature of these roles, companies are mandated to issue 1099 forms to workers earning in excess of $600 annually, ensuring compliance with tax obligations. To illustrate the gig economy's workings, let's delve into the operations of prominent players like Uber, Lyft, and DoorDash, which exemplify the sector's innovative approach to employment and service delivery. In the dynamic landscape of the gig economy, compensation is directly tied to the completion of specific tasks, such as shuttling a passenger from one location to another or ensuring the timely delivery of food. This form of work is often described as piecework, where each job is a discrete piece of the larger economic puzzle. Workers in this sector receive a high percentage of the piecemeal compensation paid by the consumer and enjoy the full benefit of their tips and bonuses, with the latter often serving as an incentive to operate in particular areas or during peak times, like rush hour or following major events. The gig apps serve as the nexus of communication, connecting workers with customers and businesses alike, streamlining the exchange of services and information. These platforms also offer practical features, such as the ability to download income and tax summaries, simplifying the financial management aspects of gig work. Apps like Gridwise, SherpaShare, and Everlance play pivotal roles in empowering drivers to maximize their earnings. These and other apps provide comprehensive assistance that not only tracks earnings and expenses across different platforms. These apps are invaluable for gig workers seeking to enhance their efficiency and profitability in a competitive market. It's likely that the gig worker is using one of these apps, or a similar app, providing invaluable income and expense information. Introducing the Lewis family, Emma and Rick, along with their delightful 3-year-old Hannah. Rick, a skilled barber, and Emma, a manager at a prominent coffee chain, navigate the financial intricacies of family life while living separate and apart. To ascertain Rick's monthly gross income, we will delve into the details of his 2023 Schedule C tax form, a crucial document that will shed light on his earnings as we proceed through mediation. Here, the mediator educates Emma and Rick on the differences between an IRS deductions and reasonable business expenses for child support. While IRS deductions are based on IRS criteria, child support considers the necessity and reasonableness of expenses. Rick reports gross receipts of $45,895 and total business expenses, including a deduction of his home office amounting to $37,563.76. Schedule C line 31 reflects his net profits to be $8,331.24. For the purposes of child support, this translates to a monthly income of $694.27. Emma does not accept as Rick's monthly gross income for child support purposes, pointing out the disparity between gross receipts and net profits. The mediator then facilitates discussions scrutinizing income and expenses for which Emma specifically disagrees with. Pursuant to their agreement to mediate, Rick and Emma agreed to reschedule the mediation for Rick to bring in supporting documentation for certain expenses, understanding that full financial disclosure is expected, but further understanding that the documents will be confidential and that Emma will not be able to share these documents obtained from mediation with the court. What if, Emma accepted the $694.27 as Rick's monthly gross income. What then? The mediator should then check to see if Emma fully understands the implications and is making an informed decision. Here are some tools that the mediator could consider. Clarifying the information. The mediator could check to see whether Emma understands the difference between gross receipts and net income, and how Rick's business expenses and deductions affect the calculation of his income for child support purposes. Encourage questions. The mediator should encourage Emma to ask questions about any aspect of Rick's financial disclosure that she does not understand. Provide education. The mediator could go back over the basics with Emma, explaining the difference between IRS and child support considerations, or provide educational resources, such as the Schedule C instruction, to help Emma understand the financial aspects of Schedule C. Professional advice. The mediator may suggest that Emma as well as Rick seek independent professional advice. The Virginia State Bar has a legal referral service. The phone number is 804-775-0808 and will provide the party with a family lawyer geographically near them for a low-cost consultation. Caucus. The mediator might hold a breakout session with Emma to discuss her concerns and the reasons for her acceptance of the income amount without scrutiny. Ethical considerations. If the mediator has ethical concerns about the acceptance of the financial information, the mediator should address these concerns directly with both parties and take appropriate actions to uphold the integrity of the mediation process, including possibly terminating the mediation. It's time to review. Navigating the complexities of self-employment income calculation is indeed a nuanced endeavor. The Schedule C tax form, while primarily designed for tax reporting, becomes a pivotal document in child support deliberations. It's a process that demands meticulous scrutiny and an unbiased approach from the mediator, as the distinction between tax deductions and reasonable business expenses can significantly impact the perceived income of a self-employed parent. This intricate task, though daunting, is essential, offering both parties a valuable service that can save considerable time and money. The goal is to achieve a level of competence that facilitates a fair outcome, rather than unattainable perfection. The net profit detailed in Schedule C is a reflection of the parent's annual income, encompassing gross income and business expenses. For those in the gig economy, income is often tracked via gig apps, which detail piecemeal payments, tips, and bonuses. Disagreements over the net profit as the true representation of annual income necessitate the mediator to facilitate a thorough discussion, ensuring that each business expense claimed is both necessary and reasonable for the operation of the business. In instances where consensus is elusive, parties may benefit from consulting with a family law attorney, an option made accessible through services like the Virginia State Bar Lawyers Referral Service. Should there be a lack of engagement or a power imbalance, the mediator's role is to gauge the situation through caucusing, determining the viability of the mediation process and striving to maintain its integrity and the equitable treatment of all parties involved. Congratulations, you made it through another video. We hope that this has been helpful and have a nice day.